All right, traders, so we are now going to look at the fractal bounce trade setup. So in my opinion, the best trade setup is the fractal bounce trade because the fractal bounce trade is set up to follow the direction of the trend, and therefore it's in line with the strength of the market. So this trade will have you trading with the current flow of money rather than paddling upstream. So as the market trends up or down, it always has to correct itself or pull back. Several factors can contribute to or even create the conditions for a correction, such as news, fear, and profit taking. Okay, so trading the fractal bounce trade is going to get you in with the momentum, not against the momentum, and that's what we want to be doing, trading with the momentum. All right. So looking at this chart, we've gone through this prior before, so you also should know this. So looking at the chart, you see how a typical market trend moves. This is a bullish market, bullish trend. So you could see the green lines, they're going to be your impulse waves where the market moves higher and it's following the direction of the trend. The red lines are your corrective waves where the market corrects itself and then gets back in line with the trend. So on a bullish market, you're going to see the market creating 1, 2, 3 levels and then continuing to make 1, 2, 3. All right. In a bullish market, level 2 is a fractal level. All right. So 1, 2, 3, and then go 1, 2, 3. So every bull fractal is pretty much a fractal. Every level 2 is pretty much a fractal level. Definitely will be a fractal level, but every fractal level almost will be a level 2 for us in our 1, 2, 3 structure. So every bull fractal is almost going to be, it should be level 2 for you. All right, and then just about every bear fractal is going to be level 3. Now, not consistently always, because sometimes the market does odd things and you have to count the next level, but usually it's going to be this, and that's what you'll see with the market. So level 3 is the fractal bounce trade level. So when the market moves higher on the impulse wave, we don't really want to be trading down with the corrective wave, because all the money is in the 1 leg, the 3 leg, the 5 leg here. All the money is where the green is, not where the red is. All right, and so most people here are taking profit, and then you got some inexperienced traders, and then you do have some people who do jump in on the correction, and even I would take a correction, but you need to know a correction is a correction, and it may not go where you want it to or where you think it's going to go. So where the best place to get in is level 3, where you're going to see the market take off like this. All right, level 3, the market takes off. All right, so we're looking for the market to pull back or correct at the 2 level. We might not know our level 3 until after the fact, but if the price pulls back to level 2 and finds support, then level 3 should form at the level 2 area when the correction ends. All right, so this level 3 should usually form at the level 2 area, this area up here. So there would be a prior level 2 down here, and you look to correct at that level. That's where you're going to get your trade. So we're now entering a trade with the market momentum and a bullish structure. All right, so how do we enter a bullish fractal bounce trade with no Ichimoku? So first of all, you wait for price to close above a bull fractal. Mark the bull fractal high with a horizontal line and place an alert. If the fractal has a wick, create a zone, and you'll see how to do that. Wait for price to pull back to the bull fractal level that was violated. Your alert will notify you when price returns to this level. Then you enter the trade on price action. There's different types of price action you can enter on. All right, so one of the ways I'm going to show you is one that I haven't shown you, but I'm going to show you how to enter on a 1, 2, 3 reversal move for a trade off of your lower time frame. So what you're going to be doing is trading the fractal bounce, but you're going to look for a 1, 2, 3 reversal on a lower time frame. All right, and then your stop loss can be a variety of levels, such as your previous bear fractal, price action candle low, bottom of the fractal zone. Your choice has to be based on your risk management, and it should never exceed your 2 to 3% capital. All right. So price breaks a bull fractal. You should be marking your zones with that have wicks and then set an alert and wait for price to return. So you can see this candle has a big zone, big wick. So I make it a zone. Now the top of the zone should be at the top of the, actually I'm sorry, this is the fractal. I'm looking at the wrong thing. Here's your fractal right here, and you're right at that level. So when the market breaks that level, that's what you're looking for. Now, so once you have your zone, you have your alert set, you don't really have to pay attention to the market that much. You can wait and just come check it every day if you're trading on a daily time frame, or wait for your alert to come back. And then you see when the market gets even near this level, once it creates a fractal high, if it has their fractal low already and then a fractal high, you've already created a 1-2 pattern. And level 3 is the trade level. Actually, level 2 is really that trade level. All right, because we want the market to pull back to level 2. Now this here wasn't a good fractal exactly to show you, because really when we see the market we go 1, 2, 3. Now when this gets broken, we're going to be trading at level 2 really. It's the prior 2 and the new 3. So it's hard to really explain, but you see what it is. So price has to return to the level and look for price action entry. And in this case, we have a pin bar rejection. What you would do now is you can walk the zone here. There's a couple things. You can walk this trade, so you can walk the zone because the market's going to open here on the next candle. And when that market opens up, you watch to see if it drops lower. Your entry starts out up here. If the market drops lower, then you bring your entry lower. You cut some of this risk because that's a super big candle. And if this market tried to go back down towards this level, the farther it goes, the farther I'm moving my buy stop into this area. And then if I can buy the market down in this zone, that would be even better because I have a rejection already. I'm not going to do that just because the market comes to the zone. I'm only going to do that when the market has a rejection and I trade the wick and I trade the zone like that. Right? You don't just trade the zone like that because the zone doesn't have to hold. So with that pin bar, you put your entry here, 1 pip above the rejection high, 1 or 2 pips, and stop loss is a few pips below the rejection low. Make sure your stop loss is within your 2 to 3% loss range of your capital. And then you can see trade triggered. And it's a good trade. You can see where the market goes to. So you have less risk. You're not getting in a trade after. You're not waiting for this break because now that the market already made this move here, this is where it becomes tricky. The market could fail here. All right. Since it didn't violate 2 and gave you a big wick, of course you probably want to take your profit. But if you're trying to enter the trade on a fractal break and you had a big move like this already, that's one thing you want to pay attention to. So therefore, when you see that, you know that there might be ranging at this point. And you can see what happened. The market pulled up here, couldn't go any farther, and then it ranged in this area. All right, so how do we enter a bullish fractal break trade using Ichimoku? So wait for price to close above a bull fractal, mark the bull fractal high with the horizontal line, and place an alert. If fractal has a wick, create a zone. Same rules as without Ichimoku. There's only one difference. Wait for price to pull back to the bull fractal level that was violated. Your alert will notify you when price returns to the level. Enter the trade on the price action entry. Now, the very first thing you're going to want to make sure, you must have a bullish TK crossover. Trade the direction of the TK crossover. So this really should be the first rule. Wait to see what your crossover is. If you have a bullish crossover, then you trade bullish bounces. If you have a bearish crossover, then you trade bearish bounces. And again, your stop loss can be a variety of levels, such as your previous bear fractal, price action candle low, bottom of fractal zone, your choice based on your risk management. Didn't I say that already? Right. Okay, so here we go. Look at the exact same trade, and we see there was a bullish TK cross with signal OK for the go long right here. All right, it's the exact same trade we just looked at. But when this candle came to the level here, we had a bullish crossover and we knew we could take the trade. If we didn't have that bullish crossover and it was a bearish crossover, we wouldn't have taken the trade. So it's easy to look at these charts and explain this with a market that's not moving. And it's easy to explain this sitting here on slides. So let's go look at the charts and see how to trade with Ichimoku. All right, how to trade fractals, price action, signals that we can use, how to add the 1, 2, 3 pattern for your entry in both bullish and bearish market opportunities using just your fractals and then using Ichimoku. We're going to do both ways and show you how to trade both kind of entries. All right, so let's go right to these charts. All right, traders, this is what we've been waiting for. We've been waiting for the opportunity to learn how to trade these fractal bounce trades because, again, these are going to be some of your best trade opportunities that you get. Now, you're not going to get a ton of these, but when you get these are going to be some of your best trades, okay? So in a trend, what I'm looking at is if we get into the market that starts the trend, you may see a good 2 to 3 fractal bounces, if that, sometime. But when you catch one, then you can ride that for a very long time because you're going to be able to determine where your market value is as far as where your stop losses would be based off of using your Fibonacci expansion tool. Now you're going to use that because when we look at Ichimoku, we also incorporate our Ichimoku advanced theory where we're looking at our our levels for our N levels, our NT levels, our E and V levels. All right, so that's the observation theory, and we use that because that's all part of the measured move, if you remember everything that we talked about. All right, so let's look at this market. Let's start here. Let's understand how to trade this fractal break. The fractal bounce trade. We're going to do it right now without Ichimoku, and then we're going to do with Ichimoku, and then I'm going to incorporate some of the indicators. So this time I'll do it with nothing, just pure price action, looking at price action. Now there's a couple things we could do with the price action. So basically when I'm trading these fractal breakouts, fractal bounces and everything, I can go to my lower time frame to get my entry again. All right, because now instead of just trading, so when I go to the lower time frame, I'm going to look at where the market, as soon as the market gets to a level, so we'll look at that. Then you go to your lower time frame. You can incorporate the 1, 2, 3 trade setup to take an entry on a lower time frame. So I'll show you how to do that and we'll get all through that. So let's start with this market. Let's look at this. So the first thing we see, we understand this market. So do you understand what this market is right now? It's in a range basically because you see all these fractals close together and different fractals, and you're breaking different fractals. You're not really even breaking anything. You're making a lot of wicks. To me, a break is a close above, okay? So you reject it when you go up above and break it. You violate it when you go up above it and break it, and you reject it when you come back down. So we're basically rejecting these levels. We're not really violating these levels because here's the highest fractal really, and you're just making fractals inside of fractals, which makes this market a ranging market, a consolidated market. What I do with this, the best thing to do with this is to box it in and just trade the range levels, all right, on a lower time frame. But now what I'm going to do, I want to trade this. So I like to see the market break this level and come back to this level or to the fractal. So in this case, we're trading fractal. So we're going to wait to see if we get a bounce off of a fractal. So the market broke a fractal. This last fractal is what we're concerned about, right? So when the market breaks that fractal, the very first thing you should do, put an alert right there and draw your zone. So the zones come through via the wicks, okay? If you have a wick on the fractal like you have here, you're going to make that into a zone. So now this whole area is where you're looking to trade. It's a zone. Support and resistance is not just a line, it's an area, it's a zone. And that's what you have here. Now if you got a candle much like, suppose this was your fractal, this upper candle, you don't have any wicks there, so you don't have to make a zone. You just put it on the high right there. It wouldn't make no sense to make a zone on this. But on this here we have a clear zone, based off of the high right here. So we're good. So we're going to watch now. The market violated. So we broke a bull fractal. We're looking to come back to this fractal level, and then we're going to trade this market to the upside. If you're not putting alerts on here, you're not going to know when this happens, because more than likely you're not going to come back and look at that part of the chart. You're not going to remember where the fractal break was if you're not drawing out your zones or putting your levels. This is how you're going to trade and understand and know when things are happening. All right. So the market came right back in here, okay, and then it kind of rejected this level a little bit. Well, not rejected, it kind of violated because it closed a little bit lower. But to me, I would have thought probably that the market was coming back inside the range, and I would have thought it was coming back down to the downside here. And I would have been thinking, yeah, we're coming back, we violated there. But I also keep intact what I'm looking at, this bounce right here. So now the next candle you get was a bullish engulfing. There's a couple ways we can trade here. Now, we didn't really know this was going to be a bounce, so I wouldn't have been thinking about putting a level there. We would have definitely went to the 4-hour time frame and tried to find this entry, right? But now that we're just going to stay on the daily time frame for now, we're going to enter right at the market close. So our entry would have been right here. All right. Stop loss, you cannot just put a stop loss anywhere. You got to be technical. So the best place is below this zone, but you got some candles there, so put it below the low wick here. All right, and then determine if you can afford that, right? So you look at that stop loss and you say, well, that's 111 pip stop loss, 110 pip stop loss. I can't afford it. If you can't afford it, don't take the trade, all right, because it's not a good trade for you. Because basically what we really wanted to do, we don't want to get a trade where we got a giant stop loss. All right, and if the stop loss can't fit within your 2 to 3% money management, then you definitely don't take the trade. Now, if you can fit it in by reducing lots, then that's another story. But a lot of times we're not going to get a big candle that violates like this. We're looking for more of a rejection candle where we can get closer to this level. So therefore we didn't. That's why the stop loss was big. So I like to tell traders, every perfect trade, every good trade is not a good trade. All right. So this could be a good trade for me, but it might not be a good trade for you. Why? Because of the stop loss. The stop loss is too big. But maybe someone else could afford that stop loss, and someone else can afford it, but then maybe others can't. If you can't afford the stop loss, then the trade's not good for you. You got to give the market room to breathe and room to move. And if you don't, you're going to get stopped out a lot, and then you're going to see the market move your way. So the market bounced right on the fractal zone. So every time you get a fractal, you want to mark it. All right, so the market moves higher. And then we watch the market. So now we see the 1, 2, 3. Where's our target? All right, we can easily make our target. We entered here, so we know we definitely got to get past this level. So that's why it's scary to take a trade that close, because you're at the 1, 2, 3 level. You're at the 2 level. So 1, 2. What did I tell you 2 was? 2 was fluctuation. 3, and then 4. We'd be shooting for 4. That would be our target. All right, so let's see where that is. We're going to find our target using our let's pull these up. Fib extensions. All right, so you're going to go from the low, and this is in a bullish market. For a bullish 1, 2, 3, you're going to go 1 low, 2 high, and 3 low. So we would expect the market to come up into this area somewhere, pretty much up here where this support and resistance level is, right? This is where we're looking for the market really. So this lines right up with our Ichimoku observation theory, with our 1, 2, 3, our ABC equals CD. It lines right up with our target. So this is where we're shooting for the market to go. And the market goes there and blows through there a little bit. So now we probably take our profit, but we sit here and watch, see what the market's going to do. Now we're already in a trade. Now if we weren't in a trade, the next thing you're going to do, you're going to put an alert here, and you're going to mark that, and you're going to put your zone there, so you have an alert for when the market pulls here. Now when I get to a top like this, this is a double top level, and in reality it's more than a double top because you have these levels back here. So this all lined up with each other pretty much. I've seen this a lot here. So when that lines up with each other that much, I always like to go and look at my divergence and see if I can trade the resistance level to the downside. Always like to do that. So for me, I would be looking for this thing to go back to the downside. All right. So we marked our last fractal that we broke, but we're going to stay intact. We know we're going to probably drop here. We want to see if it's going to drop here and then violate the level. So the market dropped and came right back to our fractal, but we don't have a signal yet. Now, as soon as it touches this level, you go to the 4-hour time frame, because you may be able to get an entry on the 4-hour. But be careful, because I'm going to show you how to eliminate some losses using the Williams %R. But right now we pulled back to a fractal that we violated. You don't have a bounce yet. You don't have anything. All you have is a level. So in order for us to trade, we need three things. What is it? We need level, signal, and trigger. If you don't have a level, signal, and trigger, you don't take any trades. All right. Right now we have a level. We do not have a signal yet, nor do we have a trigger. So we're going to watch and see what the market does. We're going to be patient right there. And the market violates our level. So I'm going to take it off the table because I'm not going to trade that. And now I don't know what the market's doing, so I'm going to be patient and wait. Now it looks like we broke this level. So we were going 1, 2, 3, 4 to the upside. So now we went 1, 2, 3. Now 4 would have to break this level, and 3 shouldn't have broke below 1. So we're all messed up in here for the 1, 2, 3 continuation. So we may be seeing the 1, 2, 3 reversal. We broke a fractal right here, right? So I'm going to mark this fractal level, because now I'm going to look to trade short off of the market bounce. All right, so the market violated this level. I'm going to watch it pull back to this level, and then I'm going to short it. Now the market broke, so we were all messed up with the 1, 2, 3. It looks like we're changing direction. Now we violated that point. And now we came back to this level here. So what I'm going to pay attention to, I'm going to be very patient here. Now when you see a candle like this was probably news, so we can't really judge that. This was probably news, but you do see that the New Zealand dollar yen spikes a lot. Be careful of pairs that spike a lot. So you're going to want to pay attention to pairs that spike a lot and maybe not trade those, or just be careful when you do trade them. But at this point, I would be looking to get into the market now, because we came back to this fractal that we broke. Now the market was a little sloppy here. Even if I move it down to this fractal level, we're pretty much in that zone here. So what I'm going to do is place my entry order right here. All right. And I'm going to trade this level. I'm going to put my stop loss up here. And I'll be like 1 to 2 pips. I'll be a couple pips higher than this level. All right. Make sure it's within 2% of your stop loss. So now we said 1, 2, 3, and then 4 should go lower. So if we were looking for the big picture, we would trade it, and here's where our target would be. 1, 2, 3, and then our target would be down here. But I'm going to make it a different. I'm going to start here instead. I started there and marked it. That's a bigger term. 1, 2, 3. That's where we're looking for our target right there. So let's see what this market does. So I'm going to draw a line for our target, because I want to be able to see this and show you. So pretty much this is our target, and then we're going to get rid of this. And now I don't always take profit on my targets. I'll go to the left and see if I have support and resistance, and I'll mark all my levels, and then I'll look for the market to see if it's going to blow through those levels. So currently we haven't even been triggered yet. We have a nice rejection of a fractal level. You broke the fractal, you pulled back to the fractal, you got a rejection here. Let's see what we get. So we got a good entry there, good trade. Now, the market came all the way back to the fractal a second time and gave you another entry. So if you got in here, I know you wouldn't hold this all the way back up here. So you would make some of this profit, but then when the market pulled back up here again, right to your level, you would definitely trade it again. And then the market blows right through our target. So now what we're going to do, we're going to put another entry here, and we're going to, not an entry, but we're going to draw our zone, sorry, because we broke a fractal right here. When you break the fractal, mark the zone. Now you're not always going to come back, but if you do, you get a good shot. So you're already in a trade right here. But now we're marking this fractal because when we take profit here, we're going to look to get into this trade. Now, let's see what this market gives us. Because you break the fractal, you pull back to the fractal zone right here. Doesn't look like we're going to make it. Alright, I'm going to remove this line. We don't need that. And now the market's trying not to break this level here. Alright, and we haven't pulled back to this fractal either yet. So let's see what it's going to do. If it violates another fractal, now there violated this fractal. Put your alert there. Alright, and you can draw it as a zone. So we got two good trades here, and we're going to see what the market's going to give us. What else? Now, we may not be valid here if we're going to violate a new fractal. And we did violate a new fractal. Mark it as a zone. Put an alert. Mark it as a zone. It's kind of big. I don't like big zones like that. So I would just watch to see where the level goes now. And it bounced, it broke, and it came right back quickly and sat on there 2-3 times, and then you got an opportunity to trade. You would have put your stop loss right below this green candle here and trade to the downside. So you had a chance to make more profit. And now I think the market is trying to change direction here, but we're not sure yet. Now look where it came back to. This fractal zone that we had here. Alright, so we bounced on this one time, came back and rejected. Now this would have been very hard to trade, plus it was probably news, so I probably wouldn't have been able to get an opportunity in here. So news is going to be again something that we don't want to trade. So I won't even look at fractal bounces during news, so I don't even trade during news. So it doesn't matter if the market comes back to the fractal or not. During these news, I'm not going to be trading. Alright, so the market now makes a bear fractal. Now it looks like we're getting some issues here. It looks like it's changing direction. Now you broke this fractal, but the zone is so big. I want to see if the market's going to honor this area. And I would be afraid to trade this zone because it's so big. It would have to really bounce here for me. The zone is so big, and I don't like a zone that big. I'm going to put that there. That's how big my zone would be. See, that's way too big. So what I'm going to do is just watch to see if the market comes back. Then I'll go on the 4-hour time frame to see if I get an opportunity. Now see how it came back down? That might be news right there too. So I would probably be waiting to see what this market's going to do. Now it looked like it's given us an opportunity there. And so far everything looks like something you would take. Alright. Then the market makes a new bear fractal and violates it. That's major. So now we probably would have lost that trade had we taken that. Now here's an opportunity again. We're going to watch to see what the market does. You broke the fractal, so mark your zone, mark your alerts, mark that stuff because you broke. And now you broke right through this level again too. All right, so now this is what I'm looking at with this. Most definitely, this is a good sign. Yes, we broke this fractal here, and then we came back to it. And we came back, when we came back to this fractal that we broke, so we broke, came back to it. And you would have thought the direction of the market was staying to the downside because you broke a bear fractal. This happened to be just a correction, it looks like. But there's a major thing happening here that I like and that I would pay attention to. So see this fractal zone right here? We pulled back up to this fractal zone. We barely broke it. So we're going to mark this and we're going to trade this. All right, so we're going to mark this level. All right, we mark our zone. We didn't even really have to put an alert here because the market never really went that far and you would have been looking at this. So I'm going to put an entry order right here above this hair candle. All right, and I'm going to put a stop loss right here, right below that there candle. All right, and then we're going to trade to the upside on the break of this level. We're triggered. All right, we're triggered and we're losing the trade right now. Now we got a little bit of profit. So we're triggered. Let's remove this entry here. We're already triggered. The thing is, you could see these levels that sat right on this fractal level that it broke barely, but it didn't take off after it broke it. Well, you got to think of a couple things. Look at the pullback. Look at the move overall. This was just consolidation right here, guys. So when it sat at that level, you kind of knew it wasn't going to do anything. All right, and you had a fractal that you were looking to break and bounce and come back on. Really, we broke and we sat. So you don't see that a lot, but sometime you will. It broke and it sat there and then it took off. So we put an entry on the rejection level where we rejected that. Now we could have put one in here earlier. We definitely would have got stopped out, but we just so happened to put one here. And the only reason was because now we could see it after 1, 2, 3, the fourth candle. We could kind of see with this candle. Oh, you got a hangman here. You weren't sure, but you would have been thinking about putting an entry here, but you weren't real sure yet. But to see these 4 levels hold here, that confirmed it, and then you could think about taking a trade to the upside. So therefore, we're in a trade already. All right, and we haven't gotten triggered out of many of these trades. We haven't lost many of these trades. I think we lost one of these trades since we started doing this. So now we break this level. As soon as we break this level, I'm coming back, putting an alert there and drawing it as a zone and deleting that one. So we got another good trade here, and let's see what this one does for us. Now this one came right back, and now I would have went to the 4-hour to get this, but let's stay on the daily time frame. We're going to box this in. This is our price action entry. We're going to box this one in. I'm going to take a close. I'm going to take a trigger above the box. I'm going to be aggressive, and I'm going to take this level. I'm going to trade entry. Stop loss below this level. So I'm trading aggressively. And I got stopped out on this candle. Now I don't know if that was news, but you don't see that much. And then the market went my way. I probably got stopped out. Well, no, I probably might not have, because I would be below this low, right? And you see the market loves to come right back to attack your stop loss. That's why I say always be a little bit lower than the lowest low, or a little bit higher than the highest high. So we still would have been in a decent trade here. Probably would have been afraid to let this even come back that far, to tell you the truth. So in reality, that probably is a trade that I probably don't make much on, and I'm probably not in this run. But just to show you that the market does what it does, it takes off and gives you a good trade. Now when you broke that level, you need to mark it. All right, so you broke this level here. You need to mark that. And then I'm going to make it into a zone. Now we broke another level. Didn't come back to this one. When we violated this level, we're going to put an alert. Now, I'm afraid of this trade right here. Let me show you why. Even if it comes back, I'm kind of nervous. Oh no, I thought this was the double top level. I didn't remove this, so no, I'm not afraid of that. I'm afraid if it was up here. That's where I thought I was, but no, I'm down here. All right, so yeah, I'm still going to be looking for this bounce here. And it doesn't look like the market's going to give it to us. And no, it's not. And then we violate a fractal. So this is where I would be afraid. We violate this fractal, and I don't care if we come back or not. I'm going to be very careful about taking a trade into this major resistance level. All right, so I'd be kind of cautious of that. All right, so now when I see this, I'm trying to understand what the market's doing when I see that, right? So you could just look at the market and tell that it's kind of starting to honor this resistance level. So I don't really want to trade into a double, triple top level myself. So what I do now, since I'm at this major support and resistance level, more than likely I'm going to be I would have been looking to short this, but we're not talking about that. I'd have been taking a short trade here because let's look at the market. Let's add an indicator here. Divergence. Look at the divergence here. When the market was still flat, you had major divergence. Even on real Williams percent R, it started to show divergence. So that's really kind of let me know that I would probably definitely not be looking to trade to the upside. That's going to help you not to lose some trades. All right, so you would have been looking to trade to the upside on a bounce again. Now you could see we also started having more fractals in this area, so we could probably tell that we're ranging. We're definitely going to short this, but now we're not going to short it now because we're talking about the fractal bounce trade. So we can't trade this. You guys are not lucky today. All right, so let's see what this market's going to be doing. We'll go a little bit more and then we'll look at the trading this with Ichimoku. Actually, I want to take you to the, now see, we broke this fractal and I don't care about this break because the divergence, let's look at that divergence again. See how it developed, if it's any difference. Yeah, good divergence on this thing. Look at this to the downside. This is still up here. I'm definitely going to shorten this. I'm definitely going to short this. All right. Now here it looked like it was going to bounce on our fractal level, but I tell you, I would not trade it because I'm afraid of the resistance. I would wait to make sure it closes above and goes much higher, and then I would probably try to take that trade. But let's see what we got with the market. See, had we shorted that, we'd be in a better opportunity than trading into resistance. That's what we don't want to do. We never want to trade into resistance. So now we broke these fractals here. So we wouldn't want to mark our fractal levels. And now we're going to start marking our fractal levels to the downside. We just broke that one. All right. So there's where the break was, but the wick is way up here. Going to be a big zone if we marked it anyway. But this thing doesn't act like it wants to honor anything. Broke. We broke this level. All right. I'm going to put an entry right here. Not an entry, but an alert. And I'm actually going to put an alert here also because I'm going to use this whole zone. Now what I really going to look to trade, I'm going to look to trade at this zone. But I can use this as an alert level maybe. But again, I'm kind of far away still. So I probably would take that off too. Look to get up into this zone. Now, this was probably news because we don't see that happening much. And then we hit here and reject it, okay? I'm going to put an entry here. Definitely going to put an entry there with a stop loss above this level, a little bit above that level. So here's our break of this fractal right here. We broke, we pulled back. Let's trade. Okay, we made some profit here. And now we broke this fractal. So now we broke a new bull fractal and it starts all over again. So you got the concept, you understand what we're doing, you see how we're doing. I want to show you how to do this going down to the 4-hour time frame and also going to and we're trading a 1 2 3 on the lower time frame. So I'll explain that more. So we're going to go and look at it on another asset, another pair. So let's break here and go to the next pair that we're going to look at. That way we can start looking at this fractal bounce trade with other price action entries such as the 1 2 3 on a lower time frame. And then you understand how to get into a better trade, because let's look back, let's go back in time, and I'm going to show you that maybe sometime you cannot figure out the trade. Alright, so let's see where we were looking at our bounces. Alright, so we started somewhere in here. And then this was okay, so here's where we were looking. And I'm going to show you that probably all the time you're not sure about the price action. So here's the level. This was a price action that you should know. Alright. And then we came back here. You would know that, but that you wouldn't probably trade that. Alright. And then here's where we sat. You would know this because you got a rejection. This was news when we broke here. We never came back, and then we came back to our spot here. And then when we entered here, this was an easy one also. So you had almost everyone that we looked at had price action that was understandable, that we knew. Alright, sometime you get a trade where you can't even figure out the price action entry because you don't see the candles that represent the signals that you think you should be looking for. Alright, so some of the signals are going to be this. Basically, let me show you. You have to slow down when you're trading. That's why I'm on the daily time frame. I can think of everything and get everything that I need to do before that even happens. But let's look at this. So if you don't understand the price action, so here's a resistance level. This market started moving higher. It never closed below these low levels right here. Now here it did, and then it retraced a little, sat in this flat, and then made this next move higher. On this next little move higher, you never really closed below the low of the previous candle. All right, so therefore you're not really thinking about, going short. But up here you got to the resistance point, and like I said, from here up to these 4 candles, you never broke the previous low. Now back here you were kind of in a rangy area, consolidating, then the market tried to break but couldn't. And when it did that, it finally made this high but broke its first low, made a new low. That's a good sign to get into the market on the resistance level. You don't just do that anywhere. On a support level and a resistance level, we made a new low or a new high. Then we can take that trade. And then you see what the market did. All the way down here, pretty much, your highs were pretty safe, right? So this is another aspect of when you're trading with your stop loss. This is basically what it is also. So let me remove this and show you what I'm talking about. So these highs, we never break that high, never break here, never break here, never break here. So if we got into the trade up here, like we said, if we stay a couple 1 or 2 candles back, our high is protected. We could put our stop loss there, and I like to stay 2 back, right? Stop loss here, and the market never takes us out yet, and then stop loss here, market doesn't take us out, and then here the market would have taken us out before making a big drop to the downside, but we made all this profit. And yeah, we're sad or mad we missed this, but really we stayed 2 candles back. If you stay 2 candles back, this candle is where, after this candle glows, you're moving down here. So now this candle happens, you're still here. You don't want to go higher on the next candle, so you stay there. Then this candle goes, all right, so you would be still here, and then you would see the market starting to make new highs, and that's where you probably want to take your profit. All right, so sometime you don't see the price action. Pay attention to the candle action, not the signal action, but the candle action, where you see the market break a new low. Think about those things. We make a new low and we continue to the downside. Watch to see if we're making new highs but not new lows, all right, or not violating the previous low. That's a good sign that the market's strong and staying to the upside. And when you get to a point, then watch to see what happens. Now in an area like this, you're going to probably have all kinds of things happening. But then once that thing starts moving, you're sure, you know what's going on, and you could also use it for a stop loss. So let's go look at some other, let's go look at a couple other pairs and trade this using more price action entries. We're going to use that 1, 2, 3 to enter the market now. How's that sound? I'll meet you at the next chart. All right, don't take your time because I'm going to get started right away. All right, so we're going to look at a couple opportunities, how to trade this with price action on a lower time frame. So, and we're also going to look at the 1, 2, 3 entry, okay, on a lower time frame. So basically what you see here is this fractal here. We didn't get a fractal here yet. The market, you can't really tell. I mean, boom, 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 boom. So you would probably think it's starting to go to the downside, but it would have to violate this level. All right, and if it doesn't violate that level, then we're not going to the downside. Then the second thing is there's 2 fractals here. This is a shared fractal, almost. Actually, this is an inside fractal, and I call it that because it's inside the trend. Really, it was one of the biggest candles here, and yeah, it made a big fractal at this level. It's not really a fractal level that you want to see the start and end of something, because nothing started or ended really right there. You want to see it at the peak at the top. These in-between fractals that develop like this, because they're such big candles, bigger than the previous other candles. See this? This is in between the trend, so you kind of don't want to see those. All right, I don't pay attention to those a lot. So we're going to see what the market's going to do here. We made a new fractal low. All right, and then we're attacking this level. And then we violated that level. Put your alert on there and then draw your zone. Put an alert, draw your zone, and then watch to see what the market does when it comes back. Right on there, bounced and gave you a bullish engulfing. So we didn't want to see a bullish engulfing candle, all right, because the bullish engulfing takes us far away from this level. So as soon as the market gets back to this level, this is where you're going to go and look at your 4-hour time frame. So in order for me to see that, I'm going to take this level. I'm going to see exactly where this level is on the 4-hour time frame. So I'm going to draw a line here, and this is where we're going to see this candle touch that level, and that's where we want to that's when we're going to switch from our daily to our 4-hour to start looking at the market. So let's go to the 4-hour time frame. Okay, so we're on the 4-hour time frame, and you can see this is our level that we had, our line. So I'll show you right where we are. So we're back at this point. As soon as we get to this 4-hour time frame, as soon as we get touching this level, we're going to start looking for our entry on the 4-hour time frame. So the price action entry per candle is going to be one of the best things for us. So I already have not a rejection candle, but I have an indecision candle, and I'm going to trade that indecision. I'm going to trade it just like this. I'm going to put an entry at this level, 1 to 2 pips above. Now I'm going to start out with my stop loss below this level because I have to, because that's my zone, so I need to be aware of that. And there's nothing else for me to really see here. All right, so let's see what this market's going to do here. Now, it dropped like that. When the market does this, I'm going to go and I'm going to put my entry lower. if it drops like that, it gives me a new entry, and it's a rejection inside the zone. I'm going to put an entry right there at the top of the zone, right at the zone. So let's see what we get happening. And now it even gives me a better opportunity, right? So I can even move it a little lower because these are rejection candles. Now you can see where the rejection's really starting to take place inside of our zone. Now this is a 4-hour time frame, but this zone is a daily zone. That's why it dropped in there and it looks like this. So now we got a much better entry. Stop loss, I moved it. Let's put it back. Put the stop loss here. We haven't gotten triggered yet, so we're good to go. Now we're triggered, and look at that. We didn't risk a lot, and we already made more than we risked. All right, and then let's see what this market's going to do for us. And we made profit. And then now the market looks like it's getting ready to do what we want it to do, right? So coming down here, we didn't have a 1, 2, 3 as we would be starting to have now, because the market says 1, 2, 3, and then we go 1, 2, 3. Don't like that. Didn't get much of a pullback there. All right, but now we're at this top, and then we're starting to look for the 1, 2, 3 again. But the 1, 2, 3 is a reversal, as you see. 1, 2, 3. But then this now went from 1, 2, 3. So at 1, 2, 3, we're looking for the 4. So if we've got our 1, 2, 3, because you don't have that here. Anywhere we look here, we have 1, 2. This would be 3 way down here because we got so many in between. We don't have much. Yeah, so it's hard to see the 1, 2, 3 here. 1, 2, 3, and then we're long again. You could see that there, but I'm trying to show you the smaller 1, 2, 3 where we could get into. So that's still a bigger 1, 2, 3. Now when we look at it like this, so we look from the bottom where we're starting to change our direction because we got low fractal here. We could go 1, 2, 3. So what we're going to do now, most of the time traders are taught to trade the 2 level. We're going to put an entry at the 2 level. Now we're already in the trade, but if you didn't get into this trade down here real good, now you're going to trade the 1, 2, 3. All right, and you're going to put your stop loss below this fractal right there. All right, so now you're trading 1, 2, 3, the break of 2. Really, this would be my 2, but I'm going to put this at this level because that may be news and we don't have those rejections like that. We're going to stay with the markets, the pretty much market structure. So let's see what the market does here. So now what you see here is we got a 1, 2, 3 shooting for 4, right? And then we could also look for our target based off of what we've been taught. All right, and then you know where the market may go. And then see it went pretty much right to your level. Now this is why I don't like to trade the 2 level, because you don't get a lot of profit, but you made profit there. Look where we got in down here. All right, and then you can see what the market's going to do. Pull back to your fractal, your 4-hour fractal, and then take off. So you got another pullback on your fractal, and then this market took off. And we don't even have to get out of this trade. The market's breaking fractals and just going. Now we're starting to probably see a turnaround here. All right, so we made good profit. We actually got in down here, and then for the 1, 2, 3 we got in here. So let me take you and show you on another chart how it's going to look. 1, 2, 3. Trading that 1, 2, 3 on a lower time frame. So let's go to look at another fractal bounce on a daily and go to the 4-hour to look at that fractal, that 1, 2, 3 trade. All right, so now what I'm doing is looking at the 4-hour time frame. I am trading the 4-hour time frame now, and I'm going to enter on the hourly time frame. And I'm just doing this so you guys could see that this stuff works on all time frames, and that you could do the same things that I show you on one time frame on the lower time frame and so forth. All right, so let's see what this market's doing. So first of all, we broke a fractal here. We're looking to pull back to this fractal. So we definitely want to mark this fractal, see if we're going to pull back to that fractal. Then we didn't pull back to that fractal, and we broke a new fractal right here. Now we pulled right back to this fractal. And then we already would be thinking about entering up here. We pulled right back to this fractal already. And then when you entered this trade, the market didn't want to give us anything. So it stayed flat. Probably would have taken a loss right there. Not good, right? Shared fractal. So you see that shared fractal there. So now I just box this market in and trade the break and trade that way. But let's continue to trade the way we were looking at. So we broke this fractal here. So now we automatically mark it. We are probably had it marked from the zone anyway. So we put an alert there and we're going to mark the fractal. Watch to see if we pull back. Now this thing just took off on us. Now we broke a fractal. Broke this fractal right here. And we never pulled back to this fractal. So this fractal we broke right here. We want to mark. Alright. And it's not even a zone, so what am I doing? It's not a zone, so we're just going to leave it like that. We're going to put an alert and we're going to let the market go, and we're going to look to take our trade at that level, because that's the last fractal there is on the chart for us to trade. Now this is a fractal. Now we hit this level. As soon as we hit this level, we want to go to the 1 hour time frame. Alright, so let's go to the 1 hour time frame. Let's mark this so we know where we are, but we'll see it because we're going right to this level right here. And then we're going to go to the 1 hour time frame, and we're going to enter. I'm going to show you price action and 1, 2, 3 on the 1 hour time frame. So here we are on the 1 hour time frame, 60-minute time frame. All right, and we come right back to our fractal that we were looking at on the 4 hour time frame. This is it here. Now really with this 1 hour we could put an entry a few places, all right, because we already got an opportunity to put a level there, but we want to get a better entry than that, and that probably wouldn't even be that big of a stop loss, right? I mean, that far from the distance. We're 20 pips away there. So anything within there is going to be a good trade opportunity, right? So we're back at this level, and now we can even get a better opportunity with an entry here, right? And then also we could be looking at this first fractal break opportunity if that happens. So we have a couple ways to short this. Now we got a 1, 2. I didn't really get a 3 yet. Alright, so we got triggered on this trade, and we also could have got an entry up here, but I'm looking at the 1, 2, 3. 1, 2. This would probably be 3, but we didn't get it yet. Now it's a 3. So 1, 2, 3 came back. So when it comes back and it can't violate 1, 2, 3, we're still looking for a long. So we don't want that one. We want this 1, 2, 3 short. So we would definitely be looking at shorting this level here. All right. We don't have the 1, 2, 3 yet though. Now look, we would have got triggered because this was a 1, 2, 3, and we broke the 2. 1, 2. Now you don't have a fractal, so that's what's probably confusing you, because you don't see the fractal there. But you see this, the market structure. 1, 2, 3, boom. Now if we just wait, and we didn't take that because we didn't see the 1, 2, 3 without the fractal, because really that fractal determines, that sets it off pretty well. And you can see what the market's doing. And now it's going back up in that area. But we would have been triggered at a couple places, like I told you. So we had some entries where we could have entered the market. Now I want to just see if I can show you a defined 1, 2, 3. All right. So it would, now this would make our entry lower. If I look at the defined 1, 2, 3, 1, 2, 3, we want to go higher. But now we're looking at the 1, 2, 3 break. So 1, 2, 3, and then we would break. So we're looking to break this level. This is where we would enter, okay, on a 1, 2, 3. Now I got a better one. 1, 2, 3, 4. So we're still there. I'm looking at the upside, sorry. Now I'm looking at the downside. Here we go. All right. So now you see the 1, 2, 3, and then you break. That's where we're going to enter. So I moved up because I got a better entry. Now I'm counting the 1, 2, 3 to reverse. It could be still 1, 2, 3 to the upside. Doesn't mean it's going to reverse, because if it doesn't reverse, that means it doesn't reject on this level. That means this level didn't hold. But I'm counting the 1, 2, 3s to the downside. There's 1, 2, 3 upside. All right. So 1, 2, 3, 4. This would have been our 1, 2, 3. But then if I look at the market now and I look at this low, this is the low. So it retraced on the 1 hour time frame. You get more retracement. So you start to see more 1, 2, 3s back to back. So you got 1, 2, 3, 4 couldn't break 2, right? Your 3, you didn't get past your 2 level. So that's a big thing. So now we put our entry right there. All right. If we can't break that 2 level, we're going to break the 3 level more than likely, or we're going to range. All right. So that's why we're going to put our entry right there. And then we got triggered. And then we're in the trade. And then the trade goes our way a little bit here. And then it goes our way. So you can see we're triggered at the 1, 2, 3. Now you got more 1, 2, 3s and they're not as defined. You don't have your fractals because you're on a lower time frame. You can't see it as clear. You're waiting for the real bigger time frame. I mean the real bigger structure. As you can see, 1, 2, 3, 4, right? Then you go here, 1, 2, 3, 4. It looks a little slow. 1, 2, 3, and then this would be 4 because we broke here. So this would definitely be 4. So you had a 1, 2, 3, 4 the opposite way because this 4 never broke. All right, so we had a 1, 2, 3, 4 this way, and we broke this level. We would have been in the trade. So actually, instead of being in the trade here, right, we would have been in here. Now if we use pure price action, we would have been in this trade a couple places off of price action up here, as I showed you. All right, but the best spot would have been there. Now your 1, 2, 3 reversal kicked in right here, really. 1, 2, 3, 4. So just so I can make sure you guys are seeing this, I'm going to draw it. 1, 2, 3, 4. We just didn't get a fractal here. So you probably weren't thinking for it. All right. But all along the market was doing this. 1, 2, 3, and it's an N wave, 4, right? And then we did this. 1, 2, 3, 4, right? And then so we start with the bottom again. And we go 1, 2, and I went here because this shouldn't break that level. So this means we're getting a change of structure here. You shouldn't break this 1 with this 3 here. This 3 shouldn't break 1. So I start to know this, we're at a high up here. All right, and then I start to look for the reversal. So when I looked for the reversal, all right, so you had 1, 2, 3, 4. That's why I said we could enter here. But then the market said 1, 2, 3, 4 couldn't break. So automatically we know again. So it was the same thing up here. 4 couldn't break and broke lower. Couldn't break, and then we broke lower, and the trade worked out for you. All right, so that's how you could look at, you could see the market come to your level on the daily time frame or on the four-hour time frame, and then go down from the daily to the 4-hour or the hourly to get into your trade. I don't like the structure changing too much on me, so I want to see clean structure, so I'm going to stay pretty much with the 4-hour, no lower. I'm not going to really go to the 1-hour, but you could. All right, but then when you start getting really lower with these time frames, your structure looks a little different with the fractals. All right, and you could see how I was looking at the 1 2 3s, and you could see how you got to really know how to count them and really count them clean. All right, so practice counting them. Practice counting them in one direction. Look for the reversal and count them the other way. All right, this was how you could enter the market using the 1 2 3 reversal on a lower time frame. The next thing I want to show you is I'm going to show you how to use the Williams percent R to enter into the market, and then after that we're going to go how to trade this same trade with Ichimoku, and then we'll be done with the fractal course, guys. It was just that quick. All right, but hopefully it was good. So let's move on. Let's look at how to trade this using the Williams percent R, because now I'm going to teach you how to not get in too early. Sometimes there's nothing that I can give you that's foolproof, but sometimes we see price action, but that price action is not ready. We think it is, but it's absolutely not. So let's look at how to trade this with the Williams percent R. All right, traders, so we are going to look at trading these fractal bounces using the Williams percent R. The Williams percent R is a momentum indicator, and it helps you to understand oversold, overbought levels. I don't really look at the market as oversold and overbought, overextended, maybe something like that. But how far can you be oversold? How far can you be overbought? How far can you be overextended? So those are the things that fall in play when you think like that. So the thing is, what Larry Williams used this indicator, and he used this, and matter of fact won a trading championship with this indicator. So we're going to use this. We're going to be using a 5-period moving at a 5-period Williams percent R, and what that's going to tell us is that when the market is near this when Williams percent R is near this negative 80 level right here, then that means the market has been trading near its lows for the past 5 periods. All right, but then when it's near this negative 20 level, that means the market has been trading near its highs for the past 5 periods, and in between would tell you that it's been pretty much in the middle of a range for the past 5 periods. All right, so it's a momentum indicator, and it'll help you to get into the market, as Williams would tell you, a little bit earlier than the market's going to show you. So it's almost like a forecast to show you that that you can get into the market a little earlier than the actual turn. So we're going to play this out and see how it works. So we broke a fractal here, but that's not really an in-between fractal, because you had a little pullback. You always want to see the pullback. That's what counts for me. But then we broke this big fractal over here. So I'm going to mark this level, put an alert there, and if the market fails here, then you're going to go to your next lower fractal level. So put an alert here. This is where we want to see if the market comes back to. All right, so now looking at the Williams percent R, you can see where it is right now. When we purchase, if we purchase a buy, we want to purchase when it goes down to this negative 80 and then reverses like this. This is a perfect one. All right, so you can see right here, it dropped below the negative 80, then the next one it closed above the negative 80. That's your signal to get into the market. So now we want to do the same thing when the market comes to our level here. So let's see how this plays out for us. Now right here is where we want to start paying attention. All right, so now we're at the negative 80 level. You don't do anything yet. The next day it closed back up above the negative 80, hit it, rejected, and went back up. That's what you want to see, that bounce off of that negative 80 or break below and break back above, which means now we would look for our entry above this candle that we did here. So normally I would be looking for my entry right here, and we're pretty much the same, but we're going to enter right here now on the candle that shot off of the negative 80 level. So if this closes above the -80, once it violates and then comes back, that's where you want to get in. All right. And then you could also look at the market. I mean, we wouldn't break till this high here, but let's see what this market does. And you can see we're in the trade. And that was a good trade for you, with the potential to make some good money there. So that gave you about 257 pip profit. All right. So let's look at a couple more opportunities using this Williams percent R. All right, so we're going to look at a bearish opportunity. So let's see what we get going. So the market violates this bear fractal. Let's mark the bear fractal. Put an alert there and mark our opportunity. Then the market makes another bear fractal and violates it. And you can see the market drop at that point. Back at that level again. But now we reach this level. All right. So we also violated this bull fractal. We could look for the market to come back here. But the big picture is the market. Look at the structure of this market. We're trending to the downside. This is more than likely a correction here. We did break our first fractal and we could have made profit there. But now the correction appears to be heading into resistance. So when you get to this level, and if you're looking to trade this fractal, this candle, anything that you use would tell you to get into this trade here. All right. I believe this was really a good rejection here. And that's where you will put your entry. And then you could see the market gave you profit. You could see what happened here. But then the market came back on you. All right, so maybe you got stopped out, maybe you decided to get out, but the market came back, gave you back to zero. But then the market did this and it looked like it broke through here and it was going to break and continue to the upside, right? And you were above this level. Now the issue here, even on the Williams percent R, I have divergence, bearish divergence. The market's going up. This is trending to the downside. I don't use Williams percent R for a lot of divergence, but when I see it on Williams percent R, I feel strong about it because you don't see it much and it doesn't show you unless it's really a strong, good indication. So what you would look at now, this very candle right here closed below the -820 level. It broke above and came right back down. You would put an entry there. Now your entry is pretty much the same where we had our first entry. So you got another entry at that point, and then you will put a stop loss up here. So maybe you did lose the first trade, maybe you broke even, maybe you made a little bit of profit because you had a big candle here, but you try to give your profits a chance to run. And then let's see what we happen. So if we stopped out, the next go around gives you a good opportunity. All right. A real good opportunity. So what you lost here maybe, or broke even, you definitely gained here. And you had a good signal off of your Williams percent R. Breaking above the -20 and then breaking right back down. Soon as this closes below the -20 and you're at your level, that's when you take your trade. You don't take any of these trades while the Williams percent R is not at one of your levels, like Tinkinson, Kijinson, horizontal support and resistance. Pay no attention to these breaks above and below unless you're at a level. And then also the market's in a downtrend, you're only going to trade the upper levels. All right. So as the market's in this downtrend, you don't want to be trading the breaks above. You basically want to be trading the breaks back below. All right. And then if the market's in an uptrend, so in a downtrend, definitely big downtrend, you want to be trading these peaks, and you want to be at your level. So you trading these peaks back down, back down, back down, back down, back down at your levels, back down. When the market was in an uptrend, if I can find one, now you want to trade the bottoms. All right. So in this small little uptrend here, you would be trading the bottoms here, the bottoms, and then finally the bottoms, and then the market gets crazy and goes back the other way. So therefore, when we're trading this and we're looking at our bounces, if we're going to bounce on a fractal, okay, so when we come up to this level here, suppose we come back up, the market's in a downtrend, we want to trade the top, and this is telling us anyway because we're trading the bounce on the fractal, so quite naturally we want to trade the top right here. And you could see market breaks down, you're trading these tops. If the market was going back to the upside and you were trading a fractal bounce, here's a bounce inside of a zone, let me mark this zone, then you would trade these bottoms. And as soon as this candle closed above this -20 right there, this candle right here, all right, I'm going to mark it again, you would put an entry right above that candle right here, and then you would have been triggered and had a good trade. All right, you're following the direction of the market basically. So when we're breaking bull fractals, you're going to be bouncing off of the bottoms, so you trade the bottom. When we're breaking bear fractals, you're going to be bouncing off of the tops, so you trade the tops. All right, so that's how you trade the Williams percent R with these fractal bounces. All right, so now let's just go to learn how to trade the fractal bounce using Ichimoku. All right. All right, so we are back here and we're going to look at trading the fractal bounce with Ichimoku. Okay, now for me, let me just clear it up before we even get started. For me, I think the best way to trade the fractal bounce is to understand the market structure and then trade just with the, you don't even need Ichimoku to trade the fractal bounce. But in your process, as you're using Ichimoku, one of the trades that you're going to see is the fractal bounce. So you want to be able to decipher if it's a good trade or not, or if it enhances the trade, and using the TK crossover helps to do that. But also that TK crossover is a little quick in reaction to the overall market, because if you look at the trend here, the overall trend here is bullish, but you have a couple crossovers that go bearish, then bullish, and then bearish again finally. Well, when you're looking at that and you get a bearish crossover, then sometime you're inclined to think that you're going to trade the bearish bounce. Okay, so a lot of times the best thing to do is, yes, trade the TK crossover direction, but also look at where you are with the cloud and understand the market structure. So I think like you're going to see trades that you don't take because they're not set up because of the crossover. That could have been good trades. Okay, so it's kind of best to understand the market. That's why I don't like to rely on an indicator totally. I like to understand the market and know the market structure. And that's why I teach you the things that we do, just so that we can understand the overall market structure when we do anything. If we're trading an indicator, no matter what we're doing, trading support and resistance, you still want to understand the market structure. You don't want to go blind to indicators. Okay, so when we look at this, and here was an example, and this is, I'm going to move this forward, but when you look at this here, there was an opportunity to trade a fractal bounce right here. Okay, so there was a fractal here. Now this, I definitely probably wouldn't have traded this fractal bounce.
but you can see where we are. So when I look at this fractal bounce, I probably wouldn't have traded this because of the rejection was so big, and it's probably a news candle. But let's break this down real quick. I'm going to go backwards and look at this. So when we look at this, you had a TK crossover where the bounce happened. So you had a bullish crossover, so you want to trade to the upside. Now, for me, the rejection was so big. That's why you go straight to your 4-hour time frame and look for this. Let's go to that 4-hour real quick. I know we already went through this, but the opportunity to just look at this again is really good. So I'm going to go to the 4-hour, and then I'm going to look at this, and then we'll move forward with the TK crossover trades. So let's look at this on the 4-hour time frame. So we're on the 4-hour time frame, and even looking at this on the 4-hour time frame, we have such a big rejection. Let's measure this. See how big this thing is. It's more than likely news. Yeah, this is super massive. All right, 156. We wouldn't even be looking at this. All right, in reality. So, but let's look at how we could trade this. Okay, so the one thing that we could do, since the wick is so big, we can walk this. And really, I don't even walk these kind of trades where you see the wick rejected this much. I mean, yes, I'll do the rejection, but I don't want the rejection to be above the support and resistance level, which is here. I prefer that support and resistance level to be, let me see where we are here. I prefer it to be like this, because now I know this is a support level. My real support level doesn't hit till here. All right, so knowing that, all this is free space for the market. So I really want to see my rejections here. So I'm going to show you how I walk these candles. So let's just look at this. This is where my support and resistance level would be, per se, if we're going to walk the candle. And also, we wouldn't be trading a candle that's 100 and something pips high off of the rejection. But let's just look at this and say we're at the level. So I want to show you how to walk these. Let's look at this. So we would definitely start our entry. All right, so we're going to enter the market, and we put our entry slightly above our candle. All right, and our stop loss would have to be below the candle. In this case, let's say we're about 40 pip stop loss, but in reality it's 100 and something. But I just want to use this example to show you how I'm walking these candles. And you could also trade this when you get in a fractal bounce and you get a rejection at a level. So say we're at a level, this is our fractal bounce level, right? So supposing we came back to a fractal, this was our fractal, we came back to it, and you're rejecting this level, all right? Well, you want to trade the walk of this. So when that candle drops, you keep your entry there, right? Or you can move it down to this level. So this is our entry. It's a buy stop entry. So the market goes lower. We could put our entry a little lower. This is going to save us some space. And then the market goes a little lower. Really, we don't want to really move too much lower because it's not dropping that hard. And then we get triggered. We save just a little bit of space. Now, sometimes you'll see these candles go way down here. As that happens, you can move your entry lower. In this case, it didn't really drop that far. We got triggered. Okay, so now looking back where we were, the reality of this is this was a fractal bounce on the 4-hour time, on the daily time frame, and we went to the 4-hour to catch it. So basically, looking at it like it really is, we would have caught our entry right there. That's pretty big stop loss still, okay, because we're like 100 and something pips away from the stop loss. Let's measure that. So that's probably one that I don't take, and it's 129 pips even when we cut it a little bit, right? But looking at that, this is how you would do. You would go back to your 4-hour time frame. You would put your entry. Now, I don't think this is going to even save you, but your daily candle probably ended somewhere up here. All right, so we're going to go back to the 4-hour. We're going to go back to the daily and start talking about our crossover. All right, so this was our level here. We came straight down, hit this fractal bounce right here, this fractal that we bounced off of. And that's, we had this TK crossover that was right here. It was bullish. So we knew we wanted to take a bullish bounce right here. And so the market came down. Now you violated a fractal here and came even lower to this fractal here. So you probably might not even have thought of looking at the fractal, but move to your next fractal and see where this is going to give you a support level. So the market drops down to this point. This is where we got in on the 4 hour. All right, so let's see what happens with this trade. Even on the daily time frame, we will see where we go with this thing. So on the daily, probably the best entry you could get would have been like this level. So I entered here on the 4 hour. But I think the best daily I would have gotten was here, just because the candle's so big, probably, and the rejection's so big. But you also see we're rejecting that Kijinsen level. So we probably feel safe about taking an entry here with a stop loss under that Kijinsen. Now in reality we rejected here, but this was probably news. And we wouldn't even be trading this if it was news. But this is what you look for. So let's move on. Now, we're in a range. All right, we're in a range and we broke a fractal here. So you got to be careful. So I didn't realize the range till we broke here, and I could see how flat we were here. I probably missed the opportunity to go on a lower time frame and trade this. But if it keeps ranging, then I can do that. So we want to see what it's going to do, but until that time I wasn't aware of the range. So I didn't get a chance to trade the range. But if it stays in or whatever it does, then you can make up your mind. So let's see what we got going on. So the first thing I'm going to do, I'm going to mark this fractal. Now, the true structure, when you look at this overall thing, so look, where could you count your 1, 2, 3 formation on the big structure? It would be 1, 2, and 3, and then shooting for 4. So really this would be 2. This would be a level where I would look for really to trade the market. Now, let me mark this. This would be 1. This would be 2 on the big picture. This would be 3, and then we would be shooting for 4 somewhere. All right. So that's if we had taken a trade anywhere in here. All right. So this is the structure of the market. You could look at this smaller 1, 2, 3. All right. So you got a 1. No, actually no, because we don't have a 3. That could have been a 2, but there's no 3. All right. So 1, 2, 3. And then shooting for 4. This one would be 3 because this is lower than that. So it still stays in formation. And you can see we're still in formation. Alright. But now we're looking for our bounce trade. So for me, I do like to see the market come back here, but maybe it's gone too far. So we'll look at all these fractals, see where it does. So let's mark the ones that we just violated, because we're not sure where this market's going to react here. All right. So let's move. All right. Now, you got a bullish crossover back here. You're still looking for the bullish bounce. This is where we're going to bounce off of, it looks like. So you almost have a little zone here. We're probably out of this probably is not going to bounce here. We'll see though. I think we're going to bounce on this level because we have this is like a zone. So that's where we're looking at. All right, so let's move. And now I would go immediately to my 4 hour to probably try to get into this. All right, now if I'm going to stay on the daily, as I'm going to do here, this would be a bullish engulfing. This is where I would be in the market. This would be too high for me. All right, but you still get your entry. All right, you can see what the market did. So we got our trade, and it's a good trade based off of the TK crossover. We stayed bullish, so it's helping us to kind of enhance our trade a little bit. All right. And this was a good trade. Now, market didn't make a fractal here. This was a good level too. Came right back to the candle that violated the fractal. Looked like it's going to bounce on there. So we don't have any fractals that we're looking at immediately. But you do see you had a Kijun-sen bounce right there, right? All right, because you rejected this level of the Kijun-sen. So you would enter above that rejection there. So we're just going over stuff that we see. But let's go to where the market just violated this fractal. This is where we're going to pay attention to right now. All right. So I'm always going to keep marking my fractals. Now I got an opportunity for a Kijun-sen bounce. I mean a Tenkan-sen bounce, sorry. You had a Tenkan-sen bounce here. Now I want to be aware of a Tenkan-sen bounce here. We're looking at the market coming here, but you also be aware of your Tenkan-sen bounce trade. And it looks like it tried to bounce off of that level. Now the market made a new fractal here. All right, so we got, look at your 1, 2, 3 structure still. 1, 2, 3, and in order to go higher, we need to break this fractal. We never came back and bounced on this level. All right, so we're done there. Now let me show you something. We broke this fractal right here. This was a first fractal break right here. Alright, so you had a first fractal break also. And you broke a bear fractal. Alright, and then the market came back up to that level. This was a bull fractal break and an opportunity for you to trade a bear fractal break, first fractal break. An opportunity for you to trade short right there. But you also want to look at the possibility of a fractal bounce now to the opposite side, but you don't have your TK crossover. So this is the case that I'm talking about, and we could see that the market structure is probably changing. You could see the thick cloud here. I don't see any true support and resistance levels that would signify that we're gonna go lower. Okay, let's see where we are here. What's this? Nothing major that would signify this is a strong support and resistance level. Maybe here, not too good though. So I probably wouldn't be looking at it that hard. But what I am looking at is I do have a thick cloud here, and it's flat. Everything flattened out here. My cloud is thick, and span A starts to roll over. Now it hasn't rolled over yet. But when I start to see that, I just want to go look and see if I have divergence. So we're going to look at divergence real quick, see if we have that. And we do have divergence. You can see that divergence. That's bearish divergence. So more than likely, with that first fractal break and the divergence and the run that we've already had with the thick cloud, all these are signs that the market is breaking down. This move here is breaking down, and we could see a trade to the downside. Therefore, we're going to look at trading this fractal bounce right here. All right. So for me now, just looking at this, you got it inside this big candle here. This is the outside candle. All right. So what I'm going to look at is putting an entry right here. I put an entry right here. Now you could also put your entry at this level because you're just going to trade the fractal break. But you got a little hangman rejection level here. It's not even a hangman. All right, but you got indecision there. So I'm going to trade the indecision low, because if the market's going to go higher, it's going to close above this level. If it's going to start to go lower, you see we're breaking we're breaking lows here. We broke lows, then we made a flat level, and then we broke the low. Really, we'd have to break this low to continue. All right, so that would be your best level. And this is the overall big market break because you're inside this candle. These two candles to the right are inside this candle. You can put your entry here, all right? Or you can put your entry here. In this case, you have an outside bar. You probably want to trade. You have an inside bar. You probably want to trade the break here, all right? But your stop loss would be up here, all right? So for me to shorten it, I'm looking at this level. So when I look at this level, I'm bouncing on this fractal. So why do I need to wait lower when the market's already gave me an inside bar with indecision here? All right, so this is a reversal. Why can't I just put my entry at the level because the market's above it, and I will put my stop loss above this rejection here, above the outside bar, sorry. And if the market closes higher, then I know my trade is not going to be triggered. But if the market closes lower, then I know I could be triggered and I can run with this move. Also, I don't have a crossover. So this is where I'm showing you that the crossover doesn't always support every trade. So let's see what goes on. We got triggered. All right, we're triggered right there, and now we're back in the negative again. And now we're in the positive. All right, so the market took off. We got a good trade. We didn't get our TK crossover. Even on our first fractal break, you could see the first fractal break trade was up here. All right, and really that true first fractal break is the close below. It would have been this candle. All right, the candle that triggered us to close below our level here, because we were trying to trade this fractal bounce where we said the market went lower and came back up higher. In actuality, it didn't even close lower. So this is really the first break of that level. So you got your first fractal break there, right? And you didn't get a crossover. So you didn't even get the true pull back and then pull back up and bounce. We just got an outside bar that then closed back up above. So we didn't get a true break of fractal, return to a fractal. You got a break here, and I wouldn't call it a break return here because you really stayed at the level. And this would have been our entry. All right. So that's just trading the fractal bounce with the crossovers. And as I said, I like to look at the market structure and understand all of that really before I just say, okay, I'm going to take it on this moving average, or I'm going to take it on this crossover, or I'm going to take it on this signal with the Williams percent R. I want to understand the market, and you need to understand the market. So you saw we do have some good trades using the TK crossover, but at times it's going to not signify a trade, all right, because it doesn't cross over with the market in time. All right, the market moves faster than these moving averages, so when the market moves, sometimes it's not going to catch up in time, and you're going to get a crossover that's not proper. So you didn't have a bearish crossover here, but you had a bearish trade and you made profit. All right, so that's looking at trading fractals. That's how we trade our fractals. Hopefully this helped you guys out. I think that fractals are very important for you. It helps you to understand the structure of the market, and if you can understand that, it's not always easy to understand the structure of the market, and the fractals will help you. Okay, and even at times with fractals, it's still hard to understand sometimes at some points where the market is really just not doing much. But those are the times that you don't want to be trading. All right, when the market's not doing much. When those fractals are signifying they're breaking and pulling back and breaking and pulling back, that's easy, and that's what you should really be trading. But when the market's showing you stuff that you don't understand and the fractals are all over the place, that's not easy to trade, and that's when you shouldn't be trading. All right, so the fractals are going to be your friend. Like they say, the trend is your friend. These fractals are your true friends. All right, they're not going to deceive you. They're not going to lie to you. They're not going to cheat on you. They're going to be your true friends. All right, so just follow these fractals, understand them, use them. Hopefully this helped you guys out, like I said. And that's it. We're done. Your fractal course. This is what you wanted. This is what you got. Until next time, guys, have a great one. God bless.